And down they go. Big tech, Nvidia down 3%, Apple down 3%, Meta down 2.5%, Microsoft down 0.5%, Amazon down 2.5%, Google down 1.5%. What is going on in the land of big tech and AI? Call it weird timing, but I did make a video on October 21st, so 2 days ago, that's titled Stock Market Correction Coming Within 6 Weeks. Mark my words. And a lot of this has to do with some AI problems that we may start to see, specifically with Apple and Apple Intelligence. Apple Intelligence is this new intelligence AI software suite that is supposed to roll out to iPhone 15 and iPhone 16, coming with a new iOS update next week. The expectations are that Apple Intelligence will drive a massive refresh cycle or upgrading cycle where a lot more people are going to go out and buy the new iPhone and thus kind of get adopted to AI at the same time. I think this Apple Intelligence debut has really high expectations, and if Apple Intelligence flops, which I think it will, you're gonna get a pushback on AI investments, because if Apple Intelligence does not go over well with the public, I don't think anything else is going to. Now, long term, I believe AI is going to change the world. I believe the world could look something like the Jetsons in the future, with robots everywhere, and we're able to pursue the, ultimate pursuit of happiness because we don't have to do these miscellaneous jobs every day. I think there's going to be massive wealth creation in regards to AI, but given where the consumer is at right now, they're stretched. They can't afford to go buy a new iPhone because Apple Intelligence, which from a lot of accounts, it's some of the same stuff that Siri already does. And that was essentially my theory 2 days ago. Now we are starting the process, I believe, of a correction. Now we actually have bad news out of Apple today, go figure. We have bad news out of Nvidia today. Go figure. First up, let's start with Apple. This article says Apple analyst Kua says company cut iPhone 16 orders by 10 million units. Apple shares fell about 2% on Wednesday after industry supply chain analyst Ming-Chi Kuo said the company has cut orders for iPhone 16 by about 10 million units. Kuo said most of the cuts impact the regular iPhone 16 instead of the iPhone 16 Pro models, which have nicer displays and better cameras and have been more popular with consumers. As a result, iPhone 16 production for the second half of 2024 is now estimated at 84 million units, Kuo said, noting that's down from about 88 million units initially estimated for production. So is this the end of the world for Apple? Clearly not, but it's still kind of an unknown how Apple Intelligence is going to translate into actual sales. Even after this pullback in Apple, the expectation is still that the Apple Intelligence features are going to help drive more sales for Apple, and I just don't buy into that right now. I have not heard one person talk about Apple Intelligence in my real life. If I ask people about Apple Intelligence, they're not really going to have a clue what I'm talking about. And thus, I don't think Apple Intelligence being one of the main features rolling out with these new iPhones is really a reason to get people to go out and buy a new iPhone. And the problem with AI, largely speaking, is these companies are investing a lot of money right now. And maybe just besides ChatGPT, besides something that helped you cheat on tests or get answers to things faster or write essay reports or, do productive things for you, maybe the American consumer is not going to rush into adopting AI until there's something actually worth adopting. I don't know if Apple Intelligence is going to be the thing that causes people to start a mass adoption wave of AI. So all of these companies spending tens of billions of dollars a piece on AI investments, which a large chunk of that goes straight to Nvidia. It's like a self-fulfilling circle. Well, some of that could start to be under question if these companies are creating products that may not actually be successful in the marketplace for many years. Now, I don't think a 10 million unit cut in iPhone 16 orders is again the end of the world. I don't think it's actually even a super big deal. It is a sign that Apple's not super confident in iPhone 16 demand, which is kind of what I expressed 2 days ago. You're going to get underwhelming results for the iPhone 16 and Apple Intelligence, but you really want to wait to see the consumer reaction from Apple Intelligence, what Apple says about adoption of Apple Intelligence. And I'm sure the numbers to some degree are going to look good, at least at first. Apple's going to say 200 million people tried Apple Intelligence or some number like that. But does that actually translate into adoption? Does that translate into more sales for Apple? And I'm not convinced of that. And at the same time, part of my correction call 2 days ago was the rise in 10-year Treasury yields. See, if 10-year Treasury yields were behaving and not continuing to rise, then perhaps a sell-off in AI or big tech could just be to the rest of the market's benefit. Maybe big tech selling off could cause a broadening out of our markets, but it's going to be really hard to get a broader rally in markets with 10-year Treasury yields that continue to climb higher. Again, even here on the day today, even though it's not super dramatic, not like we've seen over the past couple of days, 10-year Treasury yields are still moving higher, up 2.5 basis points today, up to 4.226%. So for rounding, we would round up to 4.23%. That's getting to an uncomfortable level for equities. And as of lately, big tech has been working. Nvidia has been working. These AI names have been working. But if you run into problems with Apple Intelligence that cause doubt whether or not AI will actually catch on in a mainstream way in the public's view, that's where you challenge the big tech / AI thesis altogether, at least in the near term. I talked about this in the video 2 days ago, but essentially it's kind of like Meta's metaverse in 2022. Meta got absolutely destroyed. The stock was down like 80% from its all-time highs in 2022. It was ridiculous. It was one of my best trades ever. It was like $400 into $25,000 that I hit on Meta puts when they first reported that big loss from the metaverse. And when Wall Street said to Facebook, basically, you got to stop spending like crazy on the metaverse. This is not the time for that. And the public's not adopting the metaverse. And what happened? Meta cut back their investments in the metaverse and they focused on becoming a more profitable company. If Wall Street starts to question the AI investments that Apple and Microsoft and Google and all of these other companies are making, that is going to be a big problem for markets. I think on a conservative level, we could see a 10% correction. In a more dramatic scenario, you could see a larger pullback than that. Now let's get into the bad news for Nvidia today, because Nvidia is really dragging down markets as well, down almost 4% now at the time of recording this video. And yeah, that's a rough day for Nvidia. Today, Jensen Huang said the company had resolved a design flaw that pushed back the Blackwell production to the fourth quarter, Reuters reported. So there was a design flaw, design problem in the Blackwell chip that we kind of knew about a little bit. It looks like there was another one though, that this actually pushed back production. So in the very near term, I mean, maybe that's a small problem for Nvidia. It doesn't change the overall thesis, but when Nvidia was trading at all-time highs, breaking out over the past week, and you get a headline like that, it starts to weigh heavier on the stock. Now, this article also goes on to say that attention now turns to how much the big tech companies will spend. For an example, Meta probably will to raise its capital expenditure next year by about 20%, and they word that really weird, to roughly $46 billion, according to CFRA analyst Angelo Zeno, largely to support AI initiatives. So as we get into big tech earnings, Nvidia reports late in the earnings season, if companies do plan to slow down their AI investments, that's going to be a big problem for not just Nvidia, but for the rest of big tech. But again, I'm really waiting to see via Apple Intelligence if this causes more companies to question the extreme amounts of AI spending. It's one of those scenarios where companies don't want to come out and be the first one to cut AI spending when the markets are rewarding AI spending. As of the last really 2 years, the company that spends the most has their stock go up the most. At some point that will flip. Now, it could be with Apple Intelligence. If that is not as successful as expected, that would be a catalyst to change some of that sentiment around AI spending. And AI spending being rewarded over the past 2 years could turn into AI overspending as punishing of these companies' stock. Because Wall Street is not just letting these companies spend like crazy for no reason. Wall Street wants a return on that investment. And if it looks like even Apple Intelligence is not something that is moderately successful, then these other endeavors these companies are going on, products they are making, probably not going to be successful either. Now again, AI long term, you have nothing to worry about. But expectations are so high in the near term, you cannot have a failure or a flop. And as I talked about in the video posted 2 days ago where I called for a 10% correction, it's important to remember that it could take some time for this to happen. The day that Apple Intelligence comes out, you're probably not going to know if it's a flop or not. I would be surprised if Wall Street assumed Apple Intelligence was a flop the day it launched. You're going to have to wait a week, 2 weeks, maybe 3 weeks to get that confirmation. So I do think we are in the early innings of seeing that 10% correction that I previously called for. Now, we are hitting our 20-day moving average right now. That 20-day moving average at 576.33 on the SPY. You're actually about 50 cents higher than that right now, but we'll see where things shake out by the end of the day. If you do not hold support at that level, then it looks fairly certain you're going to eventually fall to that 50-day moving average around 564. Now, my 10% correction call, keep in mind, depending on the path of what causes this, it could be more than that, but if we stop at the 50-day moving average, that's only a drawdown of 3.64% from the all-time high. That's not a lot. Even though that might feel like it's painful, it's just not. That's not a big fall. 10% from the all-time high would put the SPY back to about 530. And that is the drawdown that I'm expecting over the next 6 weeks. That almost perfectly aligns with your 200-day moving average at $528.25 per share. So a test of that 200-day moving average is in the cards right now. Here on the day today, the percent of stocks trading above their 50-day moving average is falling to 54.11%. You have almost 4% of stocks falling below their 50-day moving average today. So just another bad day, and it's been 3 bad days in a row where a large percentage of the S&P has started to fall below its 50-day moving average. CNN's fear and greed indicator sits at 63, which is almost in the midpoint of greed. So there's still a lot of greed out there, and I don't think this resets much of anything. We are down over 1% on the SPY. That doesn't seem to happen too often these days, but sometimes fear leads to fear. Now, I will also note that, again, the SPY is down 1.15% at the time of recording this video, but the RSP is down 0.50%. So it's down 0.5%. It's doing about twice as well, the market cap weighted S&P is falling about twice as more as the equal weight S&P, and that's because of big tech. So big tech is really helping to drag down the broader S&P today. So if you wanted some good news, it is the fact that, well, the rest of the markets, they're holding up better than big tech. Today in after hours, we have Tesla, Lam Research, IBM, Celestica, Newmont, ServiceNow, QuantumScape, Viking Therapeutics, T-Mobile, and Las Vegas Sands that report earnings. Obviously, with Tesla, Lam Research being some of the bigger ones, IBM, obviously a bigger company as well, ServiceNow, huge company there. So you do have a good amount of market cap reporting earnings today, well over $1 trillion. So you could see an even larger move heading into tomorrow. Now, some people today are also making the argument that the initial jobless claims coming out tomorrow morning could be leaked. I don't necessarily think so. I think there's a justifiable reason why the markets are down so much today. Again, Apple and Nvidia, bad news. That doesn't happen all the time. But could initial jobless claims come in bad tomorrow morning? It's a possibility. That data will come out at 8:30 in the morning tomorrow. We're expecting 247,000 initial jobless claims. Last week was 241,000. So if you come in higher than that, we're going to have a problem. If you come in the 250s or 260s, 270s, yeah, you're going to get another pretty risk off day. Again, because the impact of the hurricanes should be pretty much over with at this point. So that would be more of a problem in the labor market. You will also get the Chicago Fed National Activity Index, the global composite PMIs, the manufacturing PMIs, and services PMIs that will be coming out tomorrow morning about 9:45 in the morning. So markets will be open for trading by the time that data comes out. You will get new home sales for September, expecting that number to be negative 2.2%, following last month's negative 4.7%. And you are expecting new home sales to come in at 0.72 million. So if real estate continues to slow down, that's going to potentially become an issue if pricing starts to get compressed. Now, we got some data out today from Redfin that the median home price actually went up 0.5% last month, but you know, that can be pretty fickle, especially when there's not a lot of homes being sold. Now, tomorrow morning, we also get the Kansas Fed Composite Index, expecting that to be -6, better than last month's -8, and manufacturing index expected to be -16, better than last month's -18. So we are getting quite a bit of data tomorrow morning, and that will also, move our markets. That's probably going to be the main story of tomorrow, at least initial jobless claims. Now, today we got existing home sales. That came in at 3.9 million, a little bit higher than last month, a little bit higher than expectations, but existing home sales month over month came in at negative 1.6%, which was the lowest number that we have seen since 2010. Peter Burson on X, he is one of the only bears on Wall Street right now. He says, we got state level unemployment data today, which one can use to construct a synthetic national unemployment rate using this smoother and arguably more reliable series. It turns out that the unemployment rate rose in September. Oops. And you can actually see that from August going from 4.0068% to 4.0356%. So it went up 3 basis points according to aggregated data from individual states. It is also being reported right now, believe it or not, that Apple is releasing a new preview of its AI, including ChatGPT integration. And in other bad news today for Apple, it's being reported that Apple sharply scales back production of the Vision Pro as per the information, with what is rumored could be a stop to production completely because of there being just so little demand. So let me know what you think about all of this information down below in the comment section. Do you think we are headed for a correction? Do you think this is just a simple pre-election pullback and markets are going to race towards new all-time highs again here soon? Let me know your thoughts down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. What are you waiting for? You made it to the end of this video. Hit that like button. It's free 99. It costs you absolutely nothing to do so. With that being said, you guys have a great rest of your day. Stay safe out there, and I will see you in the next one.